Hello, how are you? My name is Jonan Kanwanoho. I'm the team leader, Jonaki Holdings Limited, managing director. So Jonaki Holdings Limited offers credits, offers loans. It's rather an opportunity to come before you today to share with you what the Lord has put on my heart, as I've always done. And today I have quite an interesting topic, which is how to collect some of the loan products. You see, some of these topics, I get them from the comments that are raised on YouTube. So if you have any issue in the business, especially money lending as a business, iron sharpens iron. So I get to share with you based on the questions that you actually asked. So this topic was birthed from one of the guys who commented on my YouTube channel. And I thought I'd actually help him, because as you succeed, we also succeed. So there are different kinds of loan products, and I don't know what loan product that you're operating. There's also a likelihood that you're operating more than one loan product, because there are those who operate in markets, there are those who operate corporates, there are those who operate car logbooks, there are those who specialize on land titles. So irrespective, it is important that you know how to collect that money. And this is what I usually advise to most of the guys that I mentor. Before you disperse that money, because you see, dispersing the money is very easy, but collecting that money is hard. So before you disperse the money, you need to know that the money is going to come back, because it is what sustains the business. It's what grows the business. So it is important that you actually know how the money is going to come back. So I highlight with you 4 steps that you go through to collect that money that you have lent out. And I'll start with the corporate, because the question was turning towards the corporate. That if you're giving money that is not secured, that you're giving to the employees of the institution, how do you go about the collections? Now, one of the ways how you can go about the collections is to interact with the human resource manager. Because you realize that the staff that are working in those institutions, sometimes they are also indebted. So they have several other loans. They have loans from banks, they have loans from their circles, they have loans from other institutions. So you need to be aware of how many loans your client has. And how do you get that information? You get it from the human resource manager. Now, there are some staff, I speak from experience, there are some staff who will tell you, you know what, I'm not comfortable with you interacting with my human resource manager. And I tell them, look, if you're not comfortable with me interacting with your human resource manager, how can I be comfortable with you taking our money of Jonaki Holdings Limited? It becomes tricky. So if they're not comfortable, it's one of the red flags that tells you, know what, this person is actually not genuine, or they have their own intentions. And that's how you close the deal. At that point, you actually stop it right there. Why? Because you cannot proceed. The money will not be collected. It will not be collectible because the person has different intentions. If not, if they proceed beyond that step, then you actually have to interact with the human resource manager. It's not just interaction of conversing, blah, blah, blah. The person, does he work here? Yes, all those screenings are important, but the key important thing is that you have to get a letter of undertaking. Because how do you confirm that actually this person made a commitment to make the payment? So you have to get a letter of undertaking from the institution. Them committing that, when we're paying the salaries for this month and this month, we shall make sure that we deduct this amount of money and credit it to your account. But also, too, you realize that some of the government institutions, like Ministry of Finance in Uganda, put a limit. You cannot deduct someone's salary beyond 50%. If the person is earning below 50% of their salary, they cannot deduct that money. So you have to make sure that the person is not indebted to the extent that they can actually not deduct beyond 50%. So they have to have a gap there. They have to be having a playing field from 50% to 100% of their salary. There are those who earn all their money, probably they don't have loans. There are those who earn 60% of their money. And you have to make sure that if I earn 60% of my salary, then the 10% can actually bridge the loan that I want from Jonaki. That's a key important thing. Because that then, if you don't ensure that it is cleared, the government might refuse to actually clear you. The government might refuse to clear you to get the salary and deduct it at source, because that is the only way. And then for private players, it is important that in addition to the human resource, because some of the clients connive with the human resource manager and they refuse to pay you. So it is important that whereas the human resource manager commits herself or himself, It's also important that the supervisor of the staff gets to know about the facility, because in our forms, when you're applying for a facility, the supervisor has to be in the know of the facility. So it's a key thing. If you're going to give money to a staff of a particular institution, you have to get a letter of undertaking as part of the evidence that the staff is getting a loan from your company, from your financial institution. And then two, I usually advise that, a staff has to, because it's unsecured, so a staff has to back up a loan facility with a check from a checkbook, and that can only be accessed from a current account. Now, some of the people may not be having the current account, but you advise them to open the current account. You may choose to interact with the bank and choose out the bank that is easy to actually have a current account. That in addition to the normal account of the staff or the client that you have at the moment, they may need to open an account, a current account, so they can have a checklift to commit to you. Why? Because in the event that they actually refuse to pay, you have the evidence of them committing this checklift to you. And an opened check at that. They have to sign the check and also highlight the amount that is on that check. Mind you, this varies from country to country, but in Uganda, you cannot commit a check beyond 10 million. So if the guy is getting 100 million, you have to make sure that they write for you 10 check leaves in the fractions of 10 million to reach the amount plus the interest that is going to be computed on the principal. So it is important that you make sure that the client has a check leaf. If they don't have, help them open an account so they can commit a check leaf. If not, then the guarantor can actually commit a check leaf on their behalf. It is still fine. But the key principal person who applies for a facility, who is the client, has to make sure that he has a check leaf, in addition to the letter of undertaking from the human resource. Point number 3, it is important that this person has a recognized guarantor, reasonable guarantor. I've seen some guys come for money, and the guy brings for you a guarantor who's probably, no offense, but probably the guy is selling popcorn on the street, or probably the guy is retailing milk on the street. So in the event that this guy fails to pay, it becomes very hard to collect this money. Why? Because the instance of a guarantor is to make sure that in case the principal person fails to pay, this guy is capable enough, has the financial muscle to cover up for the person who has failed to pay. So you have to make sure that the person has a reasonable guarantor. It's one of the indicators. You have a choice of telling the client that, your guarantor is not substantial, you actually have to look for another guarantor. If the loan is very high, I advise even that you actually assess the financial capacity of the guarantor. And a snapshot could be running a CRB report on the guarantor. Because if the guarantor is highly indebted and has bounce checks, he has character issues, he has integrity issues, so he does not qualify to be a guarantor. Because why I'm emphasizing all this scrutiny is because this is an unsecured loan. So in the event that the person fails to pay, you have to look for a way of getting this money. Because it's not secured, so you don't have anything to attach yourself to or even dispose of in the event that the person fails to pay you. So that's why you have to go through this rigorous process. Then the other point, which could be the last point, is you have to make sure that you do an MOU with the institution. Apart from the letter of undertaking from the human resource manager, in case you're getting a number of clients from that institution, it is important that you do an MOU with the company. In this MOU, the company commits to say that, we are committing to have a relationship with Jonaki Holdings Limited. And we pledge that, as we transact, our staff are free to transact with you as a financial institution. That they can actually access an overdraft. That they can actually access facilities here and there. Then it becomes very easy as well, because an MOU is signed by the MD of the institution. And this applies most to private players. You could be having a private institution, not necessarily a government institution. Because for government institution, it might be hard for a human resource to commit or executive director to commit on behalf of an institution. It could be the PS or probably head of public service. But for private players, for private companies, you can have an MOU with MD or the owner of the company, and then the human resource can be drafting the letters of undertaking for the staff or for the clients, varying from one client to client. So it is important that you have an MOU. But ultimately, you're doing all these things to make sure that this money is collectible, because it is not secured. And in the MOU, you have to highlight that in the event that this client fails to pay and is fired by the institution, then the institution commits to attach the terminal benefits. Commit to attach the savings, because some of these institutions have circles. Commit to attach the savings in the circle to actually get you cleared, or get the facility that the client got cleared. All these things have to be highlighted. It's a detailed thing, but I hope I would help, and I hope you learn this. Much of the detail from these videos can actually be got through mentorship and some of the masterminds that I run. But for now, I think it is important that you highlight those 4 things and you do them. It will help you in some of the loans which are not secured, to make sure that they are collectible. Thank you for watching. I hope you learned, but above all, go and implement. Always check us out on my YouTube channel at Jonan Kanwanoho, but also on our website at www.jonakiholdings.com. We have to grow together, because as you grow, I also be growing, and we shall make our industry clean. We shall serve clients and the communities very well. Thank you for watching. See you. Tune in for the next video.